I'm sure you have already seen the news of Tesla layoffs everywhere in the news and on Twitter. So in today's video, I'm going to talk about what this could possibly mean for the company and its stock. If you're new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, which is a website dedicated to microcap stocks, which are ignored and underfollowed by the investment industry. I also wrote about 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created valueinvestinguniversity.com, which is a free resource to make you a more intelligent investor. As you know, I've never been a fan of Tesla stock, but many times I said that I quite like the car. I quite like the product. I drove the car and it's nice. It's a computer on wheels. It's a nice little toy. I would definitely consider getting it if I was in the market for a new car. But I have my Honda Accord and it works fine. It's fully paid. No reason to be in the market for a new car. So Tesla's market capitalization recently reached $1 trillion. And that didn't stop many people from making predictions that it will reach $5 trillion, $10 trillion. I mean, whatever number they can dream up, it's good. But you see, in order to justify Tesla's valuation, many said that Tesla will need to grow about 50% per year over the next 5 years or so. And you see, the recent layoff kind of puts this a little bit in question, because think about this. Elon Musk doesn't like the prospects of the economy in the short term. So if you think about it from the point of view of Tesla's valuation, that's a little bit dangerous. And that's probably why some people might be selling the stock, because if you have to have a company grow 50% per year in order to justify its current valuation, it's pretty much priced for perfection. And if you look at some other auto manufacturing companies, which Tesla is auto manufacturing company, if you look at the revenue mix for Tesla, and if the company is making most of its money from selling cars, to me it is a car manufacturing company. It could have, other business products in line, but the fact is that currently it is a car manufacturing company. And there's many other companies out there that have other product lines, and just because they have other product lines doesn't mean they should be worth $1 trillion. So Tesla's revenues are about $50 billion, and even at today's valuation, which is a little bit less than $1 trillion, it's expensive. And you see, it's one thing if Tesla was a technology company or a software company that had huge margins, then trading at a very high multiple over revenues would be justifiable. But auto manufacturing companies, they are just not great businesses to begin with. Their margins are not great, their gross profit margins are not fantastic, and as a result, their bottom line is not fantastic once they reach the bottom line. And then even from that bottom line, so much of their money has to go for capex, capital expenditures, to keep maintaining their factories, coming up with new models for cars. That takes a lot of capital. So as a result of this, those kinds of revenues are not very high quality revenues, and those revenues do not get a huge multiples. And if you look at other car manufacturing companies, they might be trading at 50% of revenues, yearly revenues, or 1 times revenues, or maybe 2 times revenues. So when I look at Tesla, I'm like, I know it's exciting, I know people love it, but if, let's say, Tesla is successful at taking their revenues from 50 billion to 500 billion over the next 5 to 10 years, at that point Tesla is not going to be a new kid on the block. It's going to be a mature company. And so let's say if you would give it a multiple of 2, because by that time, in order to reach those revenues, it will probably have to come up with a car that's cheaper. So the margins are going to be lower. If I am trying to be conservative, it's going to trade at like 2 times revenue, okay? If I'm trying to be conservative. So in other words, it will have a market cap of $1 trillion if my valuation metric is correct. It will have a valuation of $1 trillion after it 10x's its revenues. But I am paying for that today. So it doesn't make any sense to me, right? So that's why Tesla stock is priced for perfection, in my opinion. And now, when Elon Musk is talking about laying off 10% of its salaried workers. I understand it's not hourly workers. Why is he doing this? It's probably because he's seeing that the demand is slowing down. So that 50% growth is becoming questionable, right, in the minds of investors. Whether it will materialize or not, it's a completely different thing. It's becoming questionable because Elon Musk wouldn't be talking about reductions, any reductions, if there was this kind of growth to come. And so when companies are priced for perfection, not a lot of things have to go wrong for the stock to get crushed. Like, all it has to do is, instead of growing at 50% per year, all it needs to grow is at 25% per year, and then the stock is going to get absolutely destroyed. That's all it takes. And it would make sense. It would make sense that the demand for the cars to slow down. Because think about this. What kind of people are buying Tesla's cars? The people that can afford $60,000, $70,000, $80,000 cars, right? So Tesla at this point is a luxury auto manufacturer. And the market for those kinds of cars is much smaller than, selling Toyotas or selling Hondas, right? Where everybody can afford. And how many of people bought Tesla because their portfolios were going up, because they were also investors in Tesla? And now, where everything is crashing, people that have money in the market are becoming poorer and poorer every day. Now, are they going to be buying Teslas with open arms like they did before? So that demand, it wouldn't surprise me if it dried up from those people. And then the demand from the regular folks, well, there was no demand from regular folks because they can't afford $70,000 cars. They're going to buy a used car, or they're going to buy, Toyotas or Hondas or Fords, right? So until Tesla is able to produce a $20,000, $30,000 car, those people are not going to be nowhere near buying a Tesla car. So it will be interesting to see how this plays out, and we can only see how it will going to play out over months, over quarter, over years. But for now, it's interesting to watch the situation. I think it's going to be hard for Tesla to grow at 50% per year over the next 5 years, but we'll see. Time will show. Right now, it looks like more and more people might be questioning that thesis, and whether this turns out to be true or not, only time will tell. So thanks for watching.